First up, let's take a look at the Asian markets. Remember, the Asian markets are slipping early in trade following a negative handover coming in from Wall Street. On Friday's trading session as well, the Wall Street ended lower, and now another day of weakness for the Wall Street, weighing down on the Asian markets. The Nikkei down about 0.4%. We're seeing similar sort of cuts coming by on the Korean indices as well as Straits and Taiwan. In terms of data coming in, Japan's February services PMI has come in at 52.3. This compares with 51.6, so there is some expansion out there, while the composite PMI has seen a bit of a contraction month on month, 50.7. This compares with 50.9. The SGX Nifty now, optically it's a 21-point decline, but remember, our markets weren't trading in yesterday's session. It was shut on account of Mahashivratri. So if you take a look at SGX Nifty close with regards to the Nifty futures close on Friday, it would be a cut of almost 90 points. So the Nifty Friday futures closed at 10,917, and now the SGX Nifty is indicating the start could be 10,826. So that's a 90-point decline. Why could that be? Well, a part of that could be explained by the fact that the US has intended to end preferential trade treatment for India under the Generalized System of Preferences, the GSP as we know it. As the US says, India, or Donald Trump says, India hasn't assured the US that it will provide equitable and reasonable access to its market. So the SGX Nifty, if you compare it with Nifty Friday futures close, it would be a 90-point downtake. Meanwhile, across the border in China, it is set to kick off a major annual parliamentary meeting. The National People's Congress today, the largely ceremonial gathering of nearly 3,000 representatives, is expected to reveal details on Beijing's economic growth target and a new law on foreign investment. CNBC's Martin Tsung reports on what to expect.
A little less than an hour away from kickoff, the official opening of this year's edition of the NPC, National People's Congress, China's rubber stamp parliament. And just to add on to what you were saying, Anand, this is from Reuters as well as from Dow Jones. The key number is already out. The GDP target for 2019 for this year, now a range, I emphasize a range, was 6.5%, now 6 to 6.5%. This is on Reuters as well as Dow Jones. So that's the key number we're watching for. I have to caution here, though, that most economists that we've talked to believe this economy, the world's number 2, is already comfortably growing at a below or sub 6% clip there. And a couple other key takeaways here, which I think you ran through already, but just to add on to that, in terms of employment or job creation, this is Premier Li Keqiang saying that he wants to keep urban unemployment at about 5.5%. and aims to create more than 11 million new urban jobs this year. And I want to get back to this issue here, because in a slowing economy, that's one of the challenges, right? Keeping enough, creating enough jobs to absorb new entrants into the workforce. We're talking about college graduates here who usually flock to the cities, not the countryside or the farms, to look for better paying employment as well as jobs. This is a key for China, has been for decades now. And this speaks to the issue of social stability. If you can keep your economy growing fast enough to create enough jobs to absorb the new entrants, then you've got guys who are paid in work, can pay the rent, etc., and basically keep themselves happy and off the streets and against protesting, and rather than protesting against the government. So social stability is still paramount for this country.
Okay, so that was about Asia, largely subdued, and that is because on Wall Street the stocks finished lower, with the Dow ending around 200 points lower and the S&P 500 falling below the key 2800 level. The Nasdaq Composite closed 0.2% lower. Now, investors largely believe that the likely trade resolution between US and China is priced in, and that's why we saw a bit of sell-on news as far as the US market is concerned, the worst day that we have seen in the last 1 month. In economic data, well, the US construction spending dropped 0.6% in December versus a forecast of around 0.2% gain. CNBC's Contessa Brewer gets us a wrap of all the action on Wall Street.
U.S. stocks slipping Monday, though they finished well off their worst levels. The Dow lost 206 points, the S&P off 10, and the Nasdaq down 17. U.S. construction spending unexpectedly fell in December. The report shows that investment in both private and public projects dropped at the end of 2018. Construction spending rose 4.1% in 2018, the weakest reading since 2011. OxyContin maker Purdue Pharma is reportedly exploring filing for bankruptcy. The company faces potentially significant liabilities from thousands of lawsuits alleging the company contributed to the nationwide opioid crisis by misleading doctors and patients about the dangers of OxyContin. And Southwest starts selling tickets on its first flights from California to Hawaii after announcing last week it had finally received approval from the FAA for the route. Fares start at $49 one way. That's less than a quarter of the price for the same route on competitors. Southwest flights between Oakland, California and Honolulu start March 17th. That's the action from the U.S. market. I'll send it back to you in Mumbai.
All right, that was what took place on the U.S. market, but let's hear out some opinion coming in for the U.S. market going forward.
It's important to temper expectations. You know, what let us down in December was really a decline in valuations, and what has led us back up is a re-rating in valuations. During this period of time, we've actually seen earnings estimates come under pressure. So it's not that I'm not enthusiastic and I don't think that this rally has more legs, but I think we need to think about how the underlying drivers of the rally could shift. And frankly, it's going to be the onus is really going to be much more on earnings going forward than it is on the multiple to drive additional upside from here. So we're having a lot of conversations about preparing for volatility, not putting the cart before the horse, and not expecting this pace of gain to continue throughout the course of the year.
Dovish Fed moving towards a trade deal, and some of the economic data is showing some green shoots. So I think we are where we should be. But what I think is, increasingly being priced in is that you have a Fed that is not just patient, which we all know the Fed is being patient, but is now actively seeking to do an inflation overshoot, or at least moving in that direction. And so that suggests that you really need to see significant upside surprises to growth, to inflation, for the Fed to continue hiking.
Right now, market expectation is that the Fed is entirely done. We can have a debate on that, but the futures market's saying it's over. The futures market's saying that longer-term interest rates will edge up a tiny bit, but nothing that's going to be destabilizing. So the yield curve becomes healthier in 6, 12, 18 months, but not in a way which squeezes the housing market or anything else. The inflation data we saw with ISM below 50 means that we're seeing less inflation risk. Core CPI has come down. Oil prices are off. Rents are softening up a little bit, which means that the pressure on the Fed and the pressure on the cycle is less.
The market seems to assume now that the Fed is going to be on pause for forever and for as far as the eye can see, and we're not so sure about that. The U.S. economy is strong, and if the U.S. economy is strong and inflation is where it is, at some point the Fed may need to get back into the saddle and start talking about rate hikes again. And right now the market isn't pricing that.
Well, moving on then, the US-China trade issues might be subsiding, but it looks like the US-India trade issues might be brewing because US President Donald Trump said on Monday that he intends to end India's preferential trade treatment under a program that allows $5.6 billion worth of Indian exports to enter the United States duty-free. Now, in a letter to congressional leaders, Trump writes, and I quote, "I am providing notice of my intent to terminate the designation of India as a beneficiary developing country under the Generalized System of Preferences program." End quote. Now, this letter goes on to say, and I quote, "I am taking this step because after intensive engagement between India and United States, I have determined that India has not assured the United States that it will provide equitable and reasonable access to the markets of India." End quote.
All right, and across the Atlantic, European markets, they ended mostly higher as investors digested the latest news surrounding trade discussions between both the US and China, reports suggesting they're very close to a breakthrough deal. The German index was the underperformer as the market ended with minor losses by about 8-9 points, and that was primarily on account of a couple of these medical stocks, Fresenius ST not doing too well. Brexit uncertainty continues to be in focus with less than a month to go until the UK is expected to leave the European Union. So all eyes on whether this departure will be with or without a deal, and will it materialize by the March 29th deadline. So the European markets closing higher on account of hopes of a trade deal, and the key underperformer was the German index.
Okay, with that, it's time now to slip into a quick break. Up next, we'll get you all the cues and news you need to know for trade this morning. Stay tuned for that.